So I've just placed a buy order here on the pound yen, and I'm going to put my stop loss below this zone right here, and I'll put my take profits 3 times the risk. And in this video, I'm going to show you the strategy that I'm using to place this trade, and also I'm going to show you how this trade is going to play out as we go in this video. So without wasting much of your time, let's get into the video, and let me show you this strategy that you can use to get high probability trades in the market. So let's get started. The strategy that I'm about to show you in this video is a simple break and retest strategy, which simply means you are waiting for the market to make an impulsive move, pullback, impulsive move. Now the market breaks into the previous zone right here, and you are going to be looking for the market to buy at this point right here. So in this video, I'm going to be dissecting step by step, going deep into this strategy and show you the 3 types of setups that you can get if you want to trade and maximize your profits with this strategy. So we have 3 types of trades that you can place with the break and retest strategy. So we just have 3 types of break and retest setups that we have in the market. So the first one is a trending break and retest strategy. So I'm going to show you all these strategies with examples, but first of all, here is how it works. So the trend break and retest strategy, we are seeing something like this. A market makes an impulsive move, it pulls back right here, it makes another impulsive move which breaks below the highest impulsive move, and then you see the market coming back into this zone, and then you are going to be looking to buy at this point, expecting prices to go up. We also have something called the consolidation break and retest, where you see the market moving in a consolidation zone like this, and then later on, if you see the market moving up and breaking past this zone right here, you're waiting for the market to drop down there and then move to the upside. We also have the third one, which is called a triangle break and retest strategy, where you see the market making moves to the upside, and then you see one level holding up the market, and then you are expecting prices to drop into that zone right there before moving to the upside also. So in this video, I'm going to be giving you a lot of examples, so make sure to pay attention to until the end of this video. And also I'm going to show you how that trade we placed in the first time played out towards the end of the video. So let's go ahead and let's look into the different types of break and retest trades that you can place in the market. So for you to understand how this break and retest strategy works, you first need to understand how the market moves in different trends. So for example, if the market is moving in an uptrend direction, what do you see most of the time is you see an impulsive move, and then you see a pullback. Once you see a pullback, you are judging based on this zone right here to say if the market breaks past going higher and break past this higher high here, we are continuing the uptrend. So where is the best place for you to buy in this market? If you buy right here, if you buy above this zone right here, your stop loss is gonna be far away from your entry, so it's not gonna be a good entry. So the best place to buy here is to expect prices to drop down back into this zone right here. So if the prices drops down into this zone right here, you are expecting here to buy, and then later you expect prices to move up in the upside direction, right? So with that being said, let me explain to you how this works in this market. So first, you can see that the market moves from this point right here up to this point right here, and then it makes a pullback. So now we have an impulsive move and a pullback, right? So now what we are expecting next is the market to break past this zone right here. Once it breaks past this zone, you want it to come back into this zone right here at the level 4 right here. That's when you are looking to place your order and expecting prices to go up. So let's see what happens in this case right here. So in this case, you can see the market moves to the upside, break down to the lower side, moves up again. So which zone are you paying attention to? We are paying attention to this zone right here, right? So if this market drops back into this zone right here, we are expecting prices, we are expecting that if prices comes back to this zone right here, we are expecting to get a bounce for the market to continue an uptrend, because we have a first move, we have a pullback, we have another move right here, now we have another pullback right there. So we're expecting prices to go up again. So the market is moving right now, and it comes back into this zone right here. Once it comes back into this zone right here, what do you see right here? if I zoom this in, you can see that we have 2 candles, right? So let me do this. See that in this zone right here, what do you see? You can see rejection candles, wicks here. As you can see now, we have our move, pull back, move up, pull back right here. And then this is where you are looking to buy at this zone right here. So where do you place your stop loss? There's 2 things that you need to understand right here. When you buy at this point right here, you don't want to put your stop loss right in this zone right here, because this is not a line, this is a zone. You want to give your stop loss a little bit space to breathe, so that the market can move up and down before hitting up your stop loss, and then you put your take profit. For me, with this strategy, I prefer 1 to 1.5 risk to reward ratio. So if I'm risking $100, I'm looking to make 150 for that trade right there. So in this case right here, you can see I placed my trade, and let's see what happens later with this market. So this market started moving again, and then now you can see it goes in your direction, and in no time you would hit your take profits right there. So you need to understand, right, first of all, you need to see an impulsive move. You need to see a pullback, another impulsive move, another pullback. This pullback must come into your previous level of structure, because this level was resistance once, twice, and now it's likely going to become your support levels. So placing trades like this give you maximum chances of being profitable in the market. So let's go ahead and show you another example where you can use this type of break and retest strategy in a downtrend situation. So we have this market right here, which is going in a downtrend direction. So for most people, you might be confused. Why am I saying this is a downtrend? So for you to see a downtrend, you just need to see 3 moves, right? You need to see what is called a 3 move movement. So you get from 1, 2, 3 like this. So if you get one move to the downside, another move, and the move to the downside, then that means you are now in a downtrend. So it's a 1, 2, 3 move. First of all, you just want to see a 1, 2, 3 move. That is enough for you to confirm your downtrend. Once you see a downtrend like this, so what is the best place for you to place your order? Right here, we are looking at this point right here as your previous level of structure. So what you do right here is you just mark out this zone right here. So you see, just like this, you mark out this zone, right? So for this zone right here, for most people, they want to place this zone as a line, but my advice is put this as a zone, because a support level or a resistance level is not a line. And why am I saying this is because for the trades to be moving, there's a lot of trades that are involved in the market, buyers buying and sellers selling, and there's a lot of things that happens at that level. There's also stop hands, which I'm not going to go deep into, but there's other traders who believe that there's also stop hands where big market players can come up to hit up your stop losses because before the market moves to your direction. So what happens is you want to treat this as a zone. So for me, I use the rectangle 2 right here. So by the way, if you have been, for most of the audience of this channel, you probably see me most of the time using MetaTrader 5, but I just moved on to start using TradingView right there. So TradingView is a very good charting software. There's a lot of indicators, a lot of tools to use, but it costs like $14 per month. It also have a free version which includes some adverts and some things like that. If you want to join them, I'll leave the link in the description, but I can tell you that for only $14 a month, this chart gives you a very much tools to use. You can also get custom indicators from other developers which is not found on MetaTrader 5. So I'll leave the link, you can just check it out. For me personally, if I'm trading currencies, I use this platform. If I'm trading synthetic indices, I use MetaTrader 5. So if you want to join this platform, as I said, I'll leave the link in the description. On my other videos, I'll come up with some videos for MetaTrader 5 depending on what are we trading. So if we are talking about currencies, we use TradingView. If you are talking about synthetic indices, we are going to be using MetaTrader 5. So if you like that, make sure you smash that like button below. So back to our video, we said we see our first move right here, our pullback, our another impulsive move. Now we're expecting prices to come into this zone right here, and then we are going to be looking for any type of things that shows you rejection to the upside. So for me, rejection is just long wicks to that side. So if there's long wicks to the upside, I see that the market is being rejected to go to the upside. You can use things like chart patterns, you can wait for the market to come here and then create some kind of a double top right here. Then you will see this is the neckline. Then that's when you will sell and expect prices to go down. So in this case, let's see what happens next. You can see the market now starts moving, and then the market moves back into this zone right here. So if I zoom this in, you can see there is a long wick to the upside which goes into our zone right there, and then later on you can see that after that we see a red candle which create a bearish engulfing candle. So what I will do here is I will just go ahead and place my sell trade, and this is how my sell trade looks like. You sell right here, you put your stop loss above this zone right here. I don't put my stop loss in this zone, I give it a little bit space, and then my take profit should be 1 to 1.5 risky to reward ratio. So sometimes it's gonna be a win, sometimes it's not gonna be. So there's no way that you can win 100% of the time. So let's see what happens next with this market. You can see that the market goes to the downside, is going to the downside right here, and then you can see most of the time the market is just going to go in your direction, but sometimes you have to know that the market is going to give you a lot of tension, a lot of emotions. As you can see, we were almost at our take profit right here, but the market reversed and now it's coming back to our entry point right here. So this is when most traders get it wrong. Most traders will just exit this market fearing, right? But the reason why you have this fear is because you are not following your trading plan. So you have to know exactly. As you can see, this market comes back into this zone right here with this long wick candle right here into the loss, right? So think about it, you were in profits right here, but now you are back in loss. So for most traders, they will just exit this trade at this point right here, but then later on you can see the market moving all the way to go to your take profit, and you make money with this. So now that you have understand the trending market break and retest, let's go ahead and go to the consolidation trend break and retest strategy, and you're going to see how the consolidation break and retest strategy works. So how do you identify a ranging market or a consolidation? So for you to place these high probability trades using the break and retest strategy, you need to be able to identify ranging market or zones in the market. So in this case, we are going to use this example right here. So you can see that from this point right here, the market was moving down, up, down, up, down, and it's going in a sideways direction. This is not an uptrend, this is not a downtrend, this is a sideways direction market. So this is a sideways movement of the market. So how do we know that we need to place a trade? So what is the best way to place a trade right here? So the best way to place a trade right here is going to be, okay, we need to mark out the major swing levels of this market. So I'm going to mark out this level right here. So I'll mark out this level, and also I'm going to mark out this level right here. So we know that from here this market will either go up or go down, right? So wherever it goes, we want to follow this market right here. So let's see what this market does next before we place our trades. We want to see where the breakout is going to be. Is it going to be to the upside or to the downside? Because this market is going to come out of this zone at some point in time, right? So let's see what happens next here in this case. So right now, as you can see, the first candle that broke out here closed above this zone right here. So for you to confirm the breakout, you want to see a candle which closes above this zone right here. So now what you are looking at here is, if you want to place a trade right here, so let's say you want to buy here, this market is just going to be too high for you, this price right here. So you want a discounted price. So you are going to be waiting for the market to drop back into this zone right here and look for trades at this point right here, which is what happens, I think, next in this market, right? So you can see the market moves back into this zone right here. Once it comes into this zone right here, so the wick of the market can go below the zone, but you don't want the candle to close below this zone, because if the candle goes up of your zone and then closes below it, it might be a fake breakout, right? But if the market goes up, it comes back to your zone and no candle closes below your zone, that's like this, we can see that this is a good time for you to place a buy order. The other thing that you can see right here, if I zoom this in, you can see that we have a long wick to the downside right here. We also have this gap right here. So traders believe that if the market creates a gap like this, the market is going to try and come and close that gap right here. So in this case, I would place a long position, which is a buy trade put your entry here, your stop loss below this zone, and then you take profit 1 to 1.5 risk to reward ratio. Don't be too aggressive with this, because you can get a lot of trades with this strategy. So the next thing that you can see is the market moving right into your direction, and then you can make profits from this. Right here, as you can see, the market moved all the way up, and then it hits your take profit. So I'm not here to say this is a 100% winning strategy. No. I'm not saying that. This strategy is just going to give you better results than what you have already been doing. So now let's go ahead to our first trade that we placed. I'm just gonna play that clip again, and then I'm gonna show you how the market moved and how that trade ended up looking like, and did I make money or did I lose money with that trade. So let's go ahead and look into that trade and see what happened. So right now, this trade haven't won, but it have done something which is very, very bad for most traders. What happened here is I placed the trade right here. As you can see, I placed the trade right here. The market moved all the way up, and then it come back here. It almost hit my stop loss. I don't know why it didn't hit the stop loss right here, and then it went all the way up. Right now it at this point right here, and it haven't reached my take profit. Almost reached the take profit here, but didn't, and make a big move to the downside. So I'm going to see what happens later with this trade right here, but I'm gonna delete this, and I'm gonna show you why I placed this trade. So if you look at this chart right here, you can see that this market was moving from a downside direction, and it makes a pullback. It makes another impulsive move, a pullback, impulsive move, pullback. But if you can notice that, you can see that all these moves right here are not able to go and break past this zone right here, which shows me that this zone is a very strong zone, which means this is what is called a triangle pattern, break and retest. So we can get this on a downside direction, on the upside direction. As you can see, if you mark out this zone from this point right here, and we go all the way up, marking this zone right here. So marking this zone right here, you can see that the market was trying to break this zone right here, and you can see that the market was even keeping going up and up and up, building momentum until it breaks past this zone right here. So when the market broke past this zone right here, I was patiently looking for the market to come back into this zone right here. So the market came back into this zone right here, and then it didn't show me any strong sign of reversal until it showed me two candles right here, which have long wick to the upside and long wicks to the downside, which shows you what indecision in the market. So once you see that, that's when I place the trade, put my stop loss below this zone right here. My stop loss in this case, by the way, it almost got hit, and then my take profit almost got hit, but not hit yet. So once we have this right here, you can see that we have a strategy which you can use. So I hope that you have understood this strategy. So this is what is called a break and retest strategy. If you want to get maximum value, if you want to get a simple formula which is called the TAE formula that you can use for you to maximize your chances with this strategy, make sure to check out the link in the description below. The first link in the description is gonna give you contact to me, and then later on I'm gonna give you access to the Forex Mastery Bootcamp, which is going to give you the TEA formula, which is this same strategy to get high probability trades in the market. So make sure you go ahead and click the link in the description below so that you can get maximum value right there.